On Thursday, the exchange rates of the U.S. dollar fell against the Iraqi dinar in both Baghdad and Erbil as the markets closed for the week, marking a modest yet noticeable shift in the foreign exchange landscape. According to a survey conducted, the central exchanges in Baghdad, specifically the Al-Khaifa and Al-Harithia hubs, registered a closing rate of 143,000 dinars per $100, a decline from the 143,250 dinars recorded earlier in the day. This dip illustrates the sensitivity of Iraqi currency markets to subtle changes in demand and supply, as well as the influence of broader economic trends both locally and internationally. In Baghdad's local exchange shops, the selling price of the dollar eased to 144,000 dinars per $100, while the buying rate was set at 142,000 dinars. The narrowing of the spread between central exchange rates and shop-level rates reflects the cautious balancing act that traders engage in to align with daily market shifts. For ordinary citizens, these changes may seem minor, but they carry tangible implications for the cost of goods and services, especially in a country where imports dominate daily consumption and where exchange rate fluctuations are quickly mirrored in market prices. In Erbil, the capital of the Kurdistan region, the dollar also registered a decline by market close. The selling rate was recorded at 142,900 dinars per $100, with the buying side set at 142,800 dinars. This consistency with Baghdad's declining trend highlights a nationwide pattern of dollar depreciation against the dinar, at least for the day's trading cycle. Traders in Erbil noted that while the movements were small, they pointed to relatively stronger dinar demand in localized transactions, potentially influenced by remittance flows, government cash injections, or reduced demand for imports at the week's end. Economists observing the day's developments suggest that these modest drops in the dollar's value may be tied to short-term factors such as reduced trading volume ahead of the weekend, a temporary increase in dollar supply from the Central Bank of Iraq's interventions, or subdued demand from importers. While the decline was not dramatic, it reinforces the view that Iraq's exchange market remains sensitive to immediate supply-demand dynamics, even as broader stability has been maintained in recent months. For many Iraqis, these shifts are more than numbers. They shape the affordability of imported goods, the stability of household budgets, and the confidence in the local currency. While Thursday's decline provided slight relief in favor of the dinar, that such movements can quickly reverse depending on oil revenue inflows.